Welcome to the Deep Dive. We're here to cut through all the static and really get to the heart of the story behind major companies. And today, we're taking a deep look at a real giant, International Business Machines, IBM. Our mission for you listening is pretty simple. We want to sift through all the noise, the latest earnings calls, analyst reports, the news part, to figure out what really matters about IBM, especially, if you're thinking about it as an investment. We've gone through, well, a lot. A full stock report, the Q2 2025 earnings details and transcript, recent news, trying to piece it all together for you.
Right. And just to set the scene, IBM stock is currently sitting around $263.21. That gives it a market cap of about $245 billion. Big company. And the 52-week range tells a story, too. It's been between roughly $181 and $296. Plus, you see a lot of trading activity, over 5 million shares a day on average. So, yeah, definitely a major player we're looking at.
Okay, so let's jump right in. IBM just reported Q2 2025 earnings. And the numbers, they looked really solid. But here's the weird part. The stock took a pretty big hit afterwards. It seems, well, paradoxical, right? How do you beat estimates on revenue, profit, free cash flow, and still see the stock drop? What's going on there?
Yeah, it's a great question. And it really gets to the heart of market expectations. From what we can see, the market's negative reaction seems to boil down to maybe two main things. First, there's this perception of slowing growth in the software segment, even though the overall numbers were actually up.
Yeah.
And second, maybe more importantly, just valuation concerns. Simple as that. When the earnings came out, the stock was around $261 to $262. Our fair value estimate was closer to $240, maybe $241. And our price started even lower, like $232. So the thinking is maybe all the good news, the positive outlook, it was already kind of baked into the price.
The priced-in phenomenon.
Exactly. It's like everyone expected good news, and they got it, but maybe not spectacular. Blowout news that would justify pushing the already high price even higher. The market basically said, yeah, that's good, but we already knew it would be good. It highlights that challenge, timing things around earnings.
Okay, let's dig into those specific numbers then, because they were strong on paper. Q2 revenue was $17 billion. That's up over 5% constant currency. Adjusted EBITDA, up a healthy 16% to $4.7 billion. Operating EPS, $2.80. And looking ahead, they actually raised their full-year free cash flow guidance, now expecting above $13.5 billion. And they see revenue growth picking up, accelerating to 5% plus for the year. Those sound like pretty good signals.
They absolutely are good signals. And breaking it down by segment is really revealing. Software, which got some negative attention, actually grew 8% constant currency. A lot of that was driven by strong annuity revenue. That's the sticky, recurring stuff from long-term deals. Really important for stability.
Right, predictable income.
Exactly. And within software, Red Hat and automation, which now includes HashiCorp, they grew an impressive 14%.
HashiCorp, that was a fairly recent big acquisition, right?
Yes, significant one. But on the other side of software, transaction processing was down 2%. Seems like clients were maybe shifting their spending, prioritizing the new Z17 mainframe hardware.
Okay, so that leads us nicely into infrastructure. That segment looked like a real bright spot, up 11% constant currency. And the driver, a massive 67% jump in IBM Z revenue.
Yes, 67%. That's huge.
It really is. It shows that new Z17 mainframe cycle is starting strong. People keep predicting the mainframe's death, but
it keeps adapting, right?
Yeah.
And with AI integrated.
Exactly. But then distributed infrastructure revenue is down 17%.
Yeah, that was expected, tied to the timing of their Power 11 product cycle.
Yeah.
So a bit of give and take within infrastructure, but that Z performance
Yeah.
is definitely noteworthy.
Now what about consulting?
Consulting was basically flat at constant currency, which, after some declines, flat is actually stabilization.
Not bad in a tough environment.
Right. And the key thing there is the backlog. It's still really healthy, around $32 billion. That suggests there's plenty of work lined up, potential for recovery down the road as clients maybe get a bit less cautious.
Okay, beyond the segments, the big strategic story everyone talks about with IBM is hybrid cloud and AI. It seems like that's really where they're pinning their future growth. And they mentioned their generative AI book of business. It's now over $7.5 billion since inception. That sounds like some serious momentum.
It really does. It shows this isn't just talk. They're building a real business around Gen AI. Quarter over quarter, that number is growing faster. And you see in their product innovation, too. Things like enhancing watsonx Orchestrate to make building AI agents easier. No deep coding needed. Expanding watsonx.data to handle unstructured data better for AI.
Yeah.
And then there's the new Z17 mainframe itself. that Tillim 2 processor.
Yeah.
It can handle, what, over 450 billion AI operations a day?
It's 150 billion. That's hard to even grasp.
It is. And the key is doing it with millisecond latency, right on the mainframe where the critical data often lives. Think about banks, insurance companies. They can use cutting-edge AI on their sensitive data without having to move it off-prem. That's a huge deal for security and compliance.
So it's a unique selling point, really.
A very strong one. Plus, they're using AI internally. They call it their Client Zero approach. They're aiming for $4.5 billion in annual savings by the end of 2025, just by adopting their own AI tech. They're proving it works on themselves first.
Okay, strong performance, clear AI strategy. Let's talk about defensibility. The competitive advantage, the moat. The report we looked at gives IBM a narrow economic moat rating. What does that actually mean in practice?
Well, that moat, that advantage, it mostly comes down to a few key things. High switching costs are a big one. Once you're deeply embedded with IBM systems, especially the mainframe, it's incredibly complex and expensive to switch. There's also deep client trust built up over decades, and just the fact that their stuff runs mission-critical operations.
Like the foundations of a business.
Pretty much. So that creates a lot of stickiness. Customers tend to stay. And that drives recurring revenue. What they call the multiplier effect mainframe sales lead to software and services sales. And their moves in hybrid cloud with Red Hat and AI with Watsonx, they just strengthen that integrated offering. It's hard for competitors to copy the whole package.
So why only narrow then, not wide? If it's so sticky and integrated, what holds it back from that top-tier rating? Seems like it should be wider.
That's a really fair question. I mean, the advantages are strong, but the issue is the environment they operate in. Enterprise tech is just brutally competitive and changes incredibly fast. They're constantly fighting off cloud giants, specialized software players, you name it. So they need nonstop, significant innovation just to keep their edge. They can't just rest on their laurels. That constant pressure, that need to keep running fast is what prevents a wide moat. It's less about IBM being weak and more about just how tough that market is.
Makes sense. So given that competitive landscape, what's the long-term picture look like? Still positive?
Generally, yes, the assessment remains pretty positive. The key growth drivers are still there. That momentum in software, especially Red Hat and automation. We expect Gen AI to contribute more and more across both software and consulting. And getting synergistic value from acquisitions like HashiCorp is important too.
How does HashiCorp fit in specifically?
Well, HashiCorp's tools, like Terraform for infrastructure as code, they make managing hybrid cloud environments much easier and more automated. So it helps IBM clients manage applications across different clouds, IBM's, on-prem, even competitors. It makes IBM's whole hybrid offering stickier, more complete. Then you've still got the mainframe. The Z17 cycle should keep driving related software and services. And that $32 billion consulting backlog provides a nice cushion. Plus, management thinks the overall enterprise tech market will keep growing globally, maybe 5 to 7%. So there's a growing pie for them to capture a slice of.
Okay, but every investment has risks. What are the potential bumps in the road that IBM itself is flagging?
They're pretty upfront about a few things. Consulting, as we mentioned, faces that tricky demand environment. Client caution, slower decisions that can hurt near-term growth. Then there are those specific declines, transaction processing revenue, distributed infrastructure revenue. They expect those to bounce back with product cycles, but they're headwinds right now. Also some working capital stuff, global trade shifts. They slightly impacted free cash flow growth in the first half, but the overall FCF picture is still strong. And they always monitor macro and geopolitical stuff, of course, but don't seem to see major derailments coming from there currently.
So how does all this feed back into what the market thinks? We saw the stock drop after earnings despite good numbers. You laid out the bull case. What are the bears saying? What's their main argument against IBM right now?
Right, and it's really important for you, the listener, to hear both sides. It's definitely a split. The bulls are looking at the AI strategy, the hybrid cloud position, that growing Gen AI book of business, the strong cash flow, the mainframe's enduring value. They see the dip as maybe a buying opportunity. Buy on weakness is the theme there.
Okay. And the bears?
The bears point to, well, lingering investor skepticism. Despite good results, the market seems to want more proof, a show-me attitude. They also focus on those ongoing challenges in consulting demand. And the specific revenue dips in transaction processing and distributed infrastructure, are they just cyclical or signs of something deeper? And crucially, they come back to valuation. Is the stock just too expensive right now relative to its fundamentals, limiting the near-term upside? And remember that analyst average price target we mentioned, around $206. That's way below the current price, even below our fair value estimate. That gap between the market price or a fair value and where analysts think it should be, that's a really key tension point for you to consider.
Absolutely. So you've got strong operations, a clear strategy towards hot areas like AI, a decent competitive moat, but also these market doubts and valuation questions. It really is a complex picture. IBM is definitely a fascinating company to watch, a legacy player constantly trying to reinvent itself.
Hmm.
So we've covered a lot today. IBM's recent results, the AI and hybrid cloud push, its competitive strengths, the risks, the market sentiment, hopefully giving you a much clearer view.
And the big question left for you to think about is, what's your take on IBM's future? Will that AI momentum, that mainframe multiplier, be enough to win over the skeptics and justify the current valuation, or even push it higher? It's definitely something worth mulling over.
Indeed it is. Well, thank you for joining us on this deep dive into IBM. We really hope this breakdown was valuable for you. If you did find it helpful, please consider subscribing to the Deep Dive channel. And hitting that bell icon really helps support us. It ensures you won't miss out on our future explorations into the companies shaping our world. Thanks for listening.